The government has come about with a scheme to enable a person who's holding stock to encash the input excise duty credit, so there's no double whammy. There are 2 or 3 prescribed methods. One is if you purchase the goods as a large distributor or directly from a manufacturer, or if you've imported the goods yourself and if you have a bill of entry or the excise invoice, whatever is the actual excise element or the import duty element of countervailing duty, you will get a full credit off. That doesn't necessarily solve the players through the supply chain, because as you go through the supply chain, you don't necessarily know what the manufacturer would have charged and what not. So therefore, the alternate method, if you do not have a duty claiming document, is to claim a duty on a deemed duty basis of either 40% or 60% of the CGST element. Now, I know this may sound confusing, but therefore, for you to understand what I said on terms of CGST element, if a rate of product is 18, 9 goes to the center, which is a central tax, 9 goes to the state, which is a state tax. If a product is under the 12% rate, take a mobile phone, for example, 6% goes to the center and 6% goes to the state. Ditto for 28, say a refrigerator, 14 to the center, 14 to the state. The reason I'm explaining this in great detail is for you to, therefore, be able to get a deemed credit. First things first, you need to know what is the rate of tax on your product. You sell the product applying the whole 18% rate. Therefore, on that toothpaste example, you would have charged 18. The government is giving you a deemed credit of 60% applies for 18 and 28% products. So you will get a deemed credit of 60 into 9. So you get 5.4 back from the government as a deemed credit. If your product is under the 5% category like pharma products or 12% category, then you will get 40% of the 2.5% and 6% respectively. So there is this deemed credit. I will not dwell into is this deemed credit enough. I'm sure my other panelists will have some views on that. But I'm just giving you what you need to do. There's a third option, which is more if you're into selling products that have a serial number, consumer durable items, appliances, laptops, mobile phones. These have serial numbers. If your product is manufactured in India, please be ready, and I'm sure you may have had communication from your brands that the brands can issue a document called a input credit transfer note. All of these, and that by doing that, they will disclose the exact excise duty paid on your product, and you will get a deemed credit. So in summary, either if you have a duty claiming document, claim full credit. If you have the input credit transfer document, claim full credit. If you have neither, you will be able to claim the deemed credit.